Financial. Now, the S&P 500 being in a bull market, I think it achieved this a few days ago. With all the talks of a recession, this dating back to last year, I mean, what's driving this? Is this strange to you?
It's not strange at all, actually. There's a lot of evidence to support what we've been seeing over the last several months. And, going back, looking at the last 13 bear markets, most of them from the time we hit the bottom, which sometimes it's hard to tell what the bottom is. But for this, bear market that we were in, the bottom was October 12th. So right now, rallying off that bottom is not an uncommon thing. Typically, in the last 13 bear markets, we've only retraced and backed down to those lows on 2 of those occasions. And those 2 occasions are during the financial crisis and the tech bust in the late 90s, which, it was very difficult to be in stocks then. So this is not uncommon. It actually is more common than not.
I mean, how should we feel about this rally within the S&P 500? Are recession talks behind us now? Is no recession?
Well, I mean, I will tell you this, myself and those at Carson Group who we're a part of have been saying for, since the beginning, since going back to October of last year, that recession may be unlikely. I know there's been a lot of talk about it, but, we've had the stance that we don't know if a recession is even going to happen. If it does, we think that it's not going to be, anything that's going to be major impactful. Remember, when we started hearing a lot about recession, the big impetus was that we were hearing about a lot of layoffs. And the reality was, if you looked at where those layoffs were taking place, they were taking place in those same names we're talking about now, right? Who also went on a hiring spree at the beginning of the pandemic. And the reality is their headcount today is still higher than where it was at the beginning of the pandemic. So it was really just releasing and lowering headcount based upon the conditions that exist today. So I'm not convinced that we're going to have a recession. And if we are, it's probably not coming in the near term.
What are some of your tips to investors right now, seeing what's happening?
Yeah, I mean, listen, we've been in constant contact with the families that we serve throughout this whole process. Starting with October of 2021, we started reducing, longevity on bonds in anticipation of rate hikes taking place in 2022. I think us, like many others, didn't expect them to go up as quickly as they did. But the reality is, most of the families we serve, they're not traders, so they don't need to worry about the day-to-day. The whole idea is let's put together a diversified portfolio, and then as these market events unfold, make minor adjustments that hopefully will lead to major improvements in the long run. So we're not wholeheartedly selling a whole position or buying. We're looking at the market as a whole, their portfolio as a whole, and where we are in relation to what their personal goals and objectives are. So every family is different. I can't say that we're doing this for everyone because I don't think it works that way. So, we have to take that under advice and guidance. We take what's going on in the macro world and we apply that to the families that we serve.
All right. Thank you so much today, Lawrence. Always a pleasure speaking to you.
Same, Don. Have a great day.